What are the 3 things that you need to know about appraisals when buying a home? Let's dive right in and find out. An appraisal is a report that's put together by a certified and licensed appraiser who goes into a property. They do a walkthrough most of the time, not always, but most of the time they do a walkthrough of the property. They take some measurements, they review comparable sales, they review sales data, and they put together a report that gives you the value, their opinion of the value of the property. So why is this important and why do you need this? Well, generally speaking, most lenders, whenever you get a loan, most of the time, lenders will ask for an appraisal just to ensure that they are giving you a loan for realistic valuation of what the property is worth. Without further ado, what are the top 3 things you need to know about appraisals when you're buying a home? Number 1 is that lenders are actually not supposed to directly communicate with appraisers. So oftentimes when you are going through the escrow process, you got an offer accepted and the lender starts working on your loan, what they do is that they place an order, somebody at the bank places an order with an appraisal company, and that appraisal company now dispatches an appraiser who contacts a realtor like me, either the listing agent or the buyer's agent, to schedule a time to come see the property. The reason why they're not supposed to communicate, the appraiser is not supposed to communicate directly with the lender, is because in the years leading up to the 2008 financial crisis, it was reported that it could have been standard practice with a lot of folks, lenders and appraisers, that they would kind of collude to ensure that appraisers would value the property of what the lenders are needing to give the loan for. And obviously, not having checks and balances for appraisers to give realistic values caused prices to continue to skyrocket leading up to those years, and which helped as one of the components that helped create the environment for the large crash that we saw during those years. So because that happened, a lot more guardrails were established after the crash, and that basically led up to this moment where now we have a separation between the lender, your mortgage broker, whoever you're speaking to, your representative at the bank, and the appraiser that comes and issues an appraisal report. Number 2 is, unlike most closing costs, appraisals are actually most of the time paid for upfront by the buyer. Not always, again, not everything is 100% and everything's negotiable, and different banks operate differently. But most of the time, appraisals are paid for upfront by you, the buyer, with a credit card. Generally speaking, I'm seeing appraisal costs in our area hovering around somewhere in the $800 to $1,200 range, whereas I've actually seen it for the larger homes being closer to $2,000 even in some instances. Hey, if you like this video so far, you find the information helpful, valuable, please, please, please don't forget to help us out and hit the subscribe button wherever you're watching this video. Thank you so much. I appreciate it. Okay, and then number 3, if an appraisal doesn't come in at full value of the purchase price that you offered, then you may actually need to increase your down payment amount by the difference between the appraised value and the offered value of the home. So again, this isn't 100% of the time, and depending on the down payment that you initially planned to put down and the loan products and your debt to income ratios and all these other things, if an appraisal falls short, you may not need to increase your down payment amount. You may just have to renegotiate something with the bank and change the loan product or something along those lines. However, let's say your down payment amount is 20% and you are writing a $1 million offer on a property. You're planning on putting a $200,000 down payment plus closing costs and some funds for reserves and things like that. Your offer price is $1 million. The appraiser comes in to the property and issues a value of $950,000. He says this place is not worth $1 million. Based on the comps, the place is worth $950,000. Well, oftentimes the lender will reach back out to you and say, well, okay, great. We're only going to give you a loan for a valuation of $950,000. So if you want to move forward with the purchase of this house, we're going to need you to come up with an additional $50,000. So not $200,000, but rather $250,000 for your down payment. I've seen this happen just a few times in my career, because it's kind of rare that we've written an offer for a client or even accepted an offer for somebody where on the selling side where the appraisal didn't come in at full value. But in the few times that it did happen, I did see this situation happen. Now, another situation that I've seen occur, or that I've had to actively pursue, is, for instance, an appraiser who is from another area or is a little bit greener, new, doesn't really capture the valuations in our area because we're in a very diverse, architecturally and geographically diverse area where valuations are not so simple and not so clear cut. And we have things like views, which add a lot of value to certain properties. I've actually had it where we've challenged an appraisal, where an appraisal came in short by $50,000 or $100,000, and then we issued a challenge to that, a full written down email documenting the comparable sales that we're looking at, challenging it, getting that sent to an appraiser, and actually the bank pushed them to adjust their valuation, or the bank ignored the appraisal's valuation and used our adjustment and added their own adjustment in order to see the loan go through. We have had that happen a few times, and it did work a few times. Again, it depends on the lender you're working with, it depends on the appraiser, and it depends on and obviously your realtor, how proactive they are in helping solve problems and make things happen. So quick summary, remember, lenders do not generally communicate directly with appraisers. Number two, oftentimes you're gonna have to pay for the appraisal costs up front with a credit card rather than it coming out of your closing costs. And number three, just make sure you and your realtor are confident that when you're writing an offer, and if you don't have an appraisal contingency in place, you need to understand the risks that if it doesn't come in at full value, you may have to come in with more down payment. Hope this video was helpful. Hope you enjoyed it. Hope you learned something new. Don't forget to like, comment, and definitely hit the subscribe button wherever you're watching this video. Thanks again, and I'll catch you in the next one.